Thank you, Councilman. With real estate, and to piggyback on the other speakers, education, on my part, we're uneducated in budgeting. A lot of us are not aware how to just do a simple budget each month, budgeting out your bills that you're going to pay each month. And I get a lot of in my community, when a client comes to me and want to purchase a home, they have no credit. It's not that they have bad credit, it's that they don't have any credit. And they was always taught that if they couldn't afford it, pay cash for it. They're not familiar with what the banks are requiring now. They're requiring revolving credit. They're requiring that we get credit cards. We have a good credit history with credit card companies, furniture companies, car payments. And we're so used to paying things cash that we don't have revolving credit. So it starts back with the education part, with budgeting, providing good credit, credit cards, paying your bills on time. And also, it's plenty of programs out there in the real estate for home buyers, refinancing, again, that we're unaware of. For instance, the Section 8 program, an awesome program that the state of Georgia have. The original plan for the Section 8 program was to prepare low-income families to purchase a home. The Section 8 program would actually pay a homeowner payments for 15 years. On that, they would give you down payment money. You can get up to $10,000 grant from the Georgia Dream program that will make your monthly payments for you. They come out and you can get a house anywhere. You get a custom-built house. They base it on your income. They still do a yearly review on that. And I tell my buyers, especially the ones that I transitioned from the Section 8 program, that you can pretty much cheat the system, make those extra payments. Even though you're getting this grant money from the state of Georgia, go ahead when you have that extra money, make those extra payments towards your principal, because one extra payment towards that principal a year can reduce your loan down almost 7 years from the original loan amount. Also, with the fair housing, we're unaware of the questions that a lender can and cannot ask us when we apply for a loan. We have to be more prepared with certain questions that they ask us to understand that we're not being discriminated with the application process. We're unaware of how, the credit scores requirement. There's so many resources out there for us in the real estate market to prepare ourselves with receiving our credit report annually. We can actually go online and receive our credit report. The state of Georgia allows us to get our credit report twice a year. Every 6 months, we can actually go online and pull our credit report. And something like that, we should know our credit scores just like we know our weight and our age. When someone asks you how much you weigh, and you know that, you should know your credit scores, because your credit scores are going to take you a long way with not only in real estate, but with other avenues as far as starting a business, being a homeowner, investing in other property also. And another thing is that, foreclosure. That falls back on education also. A couple of years ago, a lot of home buyers refinanced their homes. They went, getting the money out, the equity out the house, and refinanced their homes. They did not do the research that they need to do, or they were not educated as far as the difference between the types of loans, the adjustable rate loans and a fixed loan. And a lot of us fell in the trap of the adjustable rate loans, not knowing that the adjustable rate loans is just a start, a push, that whenever you start the adjustable rate loan, it's just for a certain time frame. And then after that time frame, the goal of that adjustable rate loan is going to allow you to get more money out the top and make lower payments. But the goal of that is to refinance. And a lot of us, once we received that loan, we actually did not continue to go down the correct path that we needed to continue to keep our credit where it needed to be at. We'll buy a house, and then we'll go buy big screen TVs, buy cars, and then don't worry about our credit. And when it's time to refinance your loan, you're unable to receive that credit that you need because your credit scores are below what the requirements are, and then we're forced to foreclose on the home. So, a lot of people that's foreclosing right now are not foreclosing for reasons that affecting as far as the economy. A lot of it is from just being uneducated as far as the procedures when they originated the loan in the beginning of that. And last, just talking about budgeting, we have to start with our kids. Your child is never too young to know how to budget their allowance. They're never too young. My kids, I have a 16-year-old and a 10-year-old, and both of them have prepaid credit cards. The bank won't let me get them a regular credit card, but I actually put their allowance on their prepaid credit card. And they know when we go to the store and they want to buy anything, they have to use their credit card. They know how to go online to check their balance. They know if they don't have that money, that card is going to be rejected. When they go to Walmart and want to buy those games or buy those, my daughter want to buy jewelry. So we have to prepare our kids now at a young age how to prepare for their credit in the future. Thank you.